Hello and welcome to Crypto Bible. My name's Oliver Tompkins, and in today's episode, we are literally going to be learning how to look at a chart, whether that's Bitcoin or Ethereum. Because let's face it, when we're first starting off in crypto, we want to know what the charts mean. You know, everything that's on a chart. So we're going to keep it really basic, really learn the fundamentals and so forth. I've got my friend Elliott coming on. He's waiting. I'm going to get him on, and we're literally just going to go straight into it. Throw us a like, get subscribed, and turn on the notification bell icon. Right, that's enough from me. Let's get Elliott on. Here he is. Elliott, how are you?
I'm good, Ollie. How about yourself?
I'm all good. Right, so today we are learning the basics of how to look at a chart. So can we get a chart up and literally just talk in the most simplest of terms what we're looking at?
Let's do it. So if you just give me one moment.
And this will be great. Oh, perfect. Right, let's bring that into the stream. And this will be great for anyone new that's literally looking into maybe investing in crypto or just really want to understand, you know, what a chart is. And I guess anyone coming in is like, why is it red? Why is it green? Elliott's going to reveal all.
Absolutely. In short, you know, what we want to be doing is tracking the value of tokens as a whole. So traditionally, what you'd be doing is you'd be looking at whether the market's going up and it's going down. And there's loads and loads of different ways to do it, but the best way to do it is to use TradingView, which essentially what TradingView is. It's not native to crypto, but it has crypto on it. So it's the largest used charting software. Now,
right. So do you have to pay for this TradingView software, Elliott, or is it free to everyone?
So it's free to everyone. I mean, you can upgrade. I've upgraded my account to be able to have like different things and stuff, different flags. But generally, it's free to use for everybody, and it's about 20-30 quid a month to upgrade, and that gives you access to, you know, things like more alerts, more charts, things like having different charts on the same screen. But yeah, generally, this is the best software that you can use. Now, if you wanted to say, for example, analyze Bitcoin, you could literally just type in Bitcoin here.
Good idea. Yeah.
You're going to see in here, you've got all your different ways of looking at Bitcoin. Now, what you can do is you can go to crypto, and you're going to see all the different ways of looking at crypto in that respect. So you've got Bitcoin to US dollar tether on Binance. You can also filter on certain exchanges as well. So you see here, if I'm using a Binance as my exchange, I can click Binance here, and it's going to bring up all the different Binance exchange kind of pairs for crypto, for Bitcoin, should I say.
Right, okay.
So that's the way you can do it. Now, you want to be using a chart that's native to your chosen exchange that you're using. Now, the only time you'd go above and beyond that as a kind of rule of thumb is sometimes, let's say, for example, there's a new coin or there's a new coin that's been listed on Binance that might have been already listed on Coinbase for years. You might only have a little bit of data on the Binance chart, and you might have years of data on the Coinbase chart. In that case, you'd want to use the Coinbase chart because using data previous will help you predict future results as such. So what I've got here in front of me right now is I've actually got a native to TradingView chart just for this. Now, you'll see here, this is Bitcoin against the US dollar trading on Binance. You see the current price of Bitcoin. So this would mean that one Bitcoin represents $43,564.34 in that respect. What I'm going to do is I'm going to start to break down this chart and how to look at it. So this M here, you've got different ways in which we can view this chart, right? Now, you see I've also favorited them. This M means that every single one of these represents a month worth of trading data. Okay.
M for month. That makes sense. Okay.
M for month. Yeah, exactly that. So you can see that right now, this month here, and I'm going to break down how we can read this in just a moment. This month, it takes a 5-year-old to understand that the red means it went down for that particular period and green meant it went up, right? But you can see that last month, if I just use that, because that's a closed candle, meaning that the full month has ended. So if I go down to the bottom just here, you can see the month of March the 1st, so the whole month of March, that month was a green month, okay? Meaning that the price closed higher than what it opened, okay? And I'm going to get onto how we can actually understand that in just a moment as well. But one thing that people don't see when they're new to it is that right now in April, you can see that if I go to the right just here, we've got 22 days and 14 hours until this candle closes, meaning that it moves on to the next candle for the end of the month, right? So that would then align with 22 days until April's finished, okay? Now, what I'm going to do to make this really easy for people to understand is I'm going to get up a rectangle, and I'm just going to draw a rectangle here into this this entire month period worth of data. I don't know if it's going to let me. So I'm going to have to make it a little bit more optimal in just a moment.
So that's 2 months, right? You're going over 2 months or 3 months now.
So 3 months, but
I'm going
to zoom in on just this candle here for March, okay? Now, what you're going to notice is all these candles are on this monthly time frame is all the data in that specific period converged into one candle, right? So if I now then click on W, which represents every candle within a candle, is what we can see here. So this monthly candle here, it means that red was the month of November the 1st. Then red here is another month. So each candle that we see in front of each other represents 1 month. Okay,
and the months are at the bottom, aren't they? They're the horizontal line at the bottom. They're the months.
Yes, yeah, exactly. So
and the price is on the vertical. Got it.
And the month are at the bottom. Now, if I click on the W, what we're going to see is my period. So if I'm going to be doing the month of March, I need to make this a little bit more accurate. So I'm going to go to March 7th. Just there, I could actually go to the end of February just there. And I'm going to go to the end of March just there, okay? So now what you can see is I've got 1, 2, 3, 4 weeks that represent all of, if I go back to the monthly time frame here, that represents that full amount of movement. But instead, we've got 1, 2, 3, 4 months. You can see here, this was the 28th of February, so it was probably a couple of days after that. So it was the 1st of March, right the way through to the end of March, okay?
Yeah.
And each one of these candles represents a week's worth of data, okay? And if we go down to the daily, then each candle within this period, if I make this even more optimal, I can make it, 1st of March, right the way down to the 31st of March. And what we can see here, this month's data, each one of these candles here represents 1 day of price movement, okay? Now, what you can see just here, if I do the same methodology as what I've got up at the monthly time frame, you can see that as of right now, so yesterday we had a green day. Today we've opened the day green. The buyers are winning for that period. And in 13 hours, we'll essentially move to the next candle, okay? Now, how to break down a candle, I'm going to be, it's really hard for people to grasp at first, but it's easy to understand once you break down the anatomy of a candle.
So the candles are, for people wondering, the candle is what the blocks are called, the green and red blocks. And they've got like little lines on them that we call wicks, right? So
exactly. So what we've got in here is the anatomy of a candlestick. You've got in a green bullish candle respect, you've got the open where the price opened for that particular period. So if this was a daily candle, the day opened here, yeah. Then the price moved all the way up to the highest point within that day, which is the wick, okay? It also went down to the lowest point within that day, which is the low just here, yeah? Within this day. And then you'll see that the price then closed here, okay? So the price opened here, closed here, highest point within that day, lowest point within that day, yeah? But because the price opened and closed higher, the particular day was green, okay? Yeah? And the buyers won that period. Is that understood?
Yeah, and bullish, but also bullish means obviously.
Bullish means that the buyers are in control of that specific time period. Okay,
that's it. And the bears are the opposite. Just for people to know if they want to. Yeah,
the bears are the people that when the price has been pushed down. Now, what we can see just here from a bearish candle is you flip it. Okay, so you can see the open is actually lower than the close. Okay, the open, the close is lower than the open. Should I say the close?
Yeah.
So highest point within that period, the lowest point within that period, the candle body closed lower than what it opened, meaning the sellers won that particular period. Now, if we transfer that over to the chart, you can see that if I'm breaking down, for example, this candle here, if we zoom in on this one here, you see the candle opened. If I use this data at the side here, you see the candle opened at 41,829. The highest point within that period using this wick just here was, if I actually do this, it'll make it easier to get a horizontal array. The highest point within that period was 42,484. if I then get the bottom of the candle just here, the lowest point within that period was 41,512. The candle body opened at here, 41,829, and then the candle body closed at 42,248, which was actually higher. If I just put the percentage tool up, the price went up, opened, and then closed 0.95% more, which meant it was a green period. Now, if we then go on to the next candle, we can see that the candle body opened here at 42,248. The lowest point within that period was 41,011. The highest point within that period was 42,330, and the price closed at 41,318, which was, from the point of opening, a decrease of 2.15% in that particular daily candle, okay? And all you're doing when you go up the time frames is you're replicating that exact methodology. So if we go to this candle here for last month, the highest point within that period was 48,477. Lowest point was 37,150. Price opened at 43,107, and then price closed at 43,538, which meant that the price in that period went up. Okay.
Right. So basically, the wicks, which are the thin, skinny lines, are like the highest and lowest point of the price that it's gone that day. And then when you look at the solid block, the candle is to do with open and close, right?
Exactly.
And then sometimes you might not see the wick, right? What happens when that happens? So when you can't see the little wick either side.
So essentially what that would be is it would mean an indecision in the market, meaning that the buyers and sellers have pretty much cancelled each other out. So in that respect, it could be seen as like a doji or an indecision candle. So a doji might mean that there's a large wick, but there's not been much movement, or the opposite can be when you've got not much movement in that period, and the price of bulls and bears is been pretty much regulated because there's no decision as to where things are actually going next.
Right. Okay. Brilliant. So what we'll do is we'll next week we'll have a little look at using one of the tools that you can use on a chart. That's just the fundamental, the basics. Just want to say thanks ever so much, Elliott. And we'll have a little think about a tool that we can show next week. Is that cool?
Absolutely. Thanks for that, James.
Wicked. All right. Thank you very much. See you in a bit. Bye, mate.
See you later.
I was like, well, my name's Oliver. What's going on? What's he saying? Right. Anyway, that is the fundamentals of how to look at a chart. So let's summarize. Elliott uses TradingView, and in his opinion, that's the best piece of software to use on the market. Obviously, that's up to you if you want to pay. I'd probably just use the free one and get used to looking at the charts. We looked at Bitcoin and we learned that the red and green candles, we've got bullish, which means people are buying, and we've got bearish, which means red candles that people are selling. So when we look at that chart, we see the price on the right hand side vertical, and on the horizontal we see dailies, weekly, monthlies, even yearly, depending on what we choose our option to be on the chart. And then we can see, like Elliott said, when we look at that candle, which we call it a candle with a little wicks coming off it, if it's buying, basically that the highest point is the highest point it goes of that wick, and then the block, that's where it open and closes. So if you want to rewind that bit and go over it a few times, be my guest. As always, thanks for joining me for today. Don't forget, throw me a like, get yourself subscribed to Crypto Bible, and I will see you on the next one.